So, what if the market crashes and the bank freezes my Heloc? If I made a big chunk, now I'm going to have a balance over there and a balance over here, and I'm going to be stuck. What do I do about that? Okay, great question. We're going to tackle that in today's training. Hey everyone, it's Mike Adams, and on this channel we empower individuals to achieve freedom through improved financial literacy and business ownership. If you're new to the channel, make sure to click subscribe, click the bell, so that way you get notified on any and all of our future content. So in this video today, I received a question in the comments. And again, thank you guys for your feedback. Love it, keep it coming. Had a great question, and it boiled down to this. What if the market crashes and from there they close down my home equity line of credit? Let's say I made a big chunk payment, as we describe in the velocity banking strategy, and now they freeze my Heloc to where I can no longer use that as my checkbook or as our velocity account, as we call it. So what do you do, right? How do you insulate yourself from that? And with everything going on in this economy, there's a lot of concern right now that there could be another crash. Many are predicting it even later this year, next year. There's all kinds of things out there, but certainly a lot of concern. Even the fact that the U.S. dollar potentially falling off as the world's reserve currency. So a lot of different things going on that may have some people thinking, okay, well, I might want to do this chunk over to my Heloc. I get that. It's going to save me a ton of interest on the back end on that loan, it's amortized repayment schedule. It's going to save me some money here. But what if I bring it over, then the economy tanks, and from there they freeze my Heloc? So before the bank even has an opportunity to freeze your Heloc, the first thing I'd recommend is look at getting a second line of credit in place, preferably an unsecured line of credit. The reason that your Heloc may freeze in a crash is the value of your property may go way down. And if that's the case, all of that equity is gone that they actually created the Heloc around. If you no longer have that equity, that's why they're going to freeze up that line. So get your hands on an unsecured line of credit that you can have, on reserve, and don't use it. We just have it on deck just in case. That would be one way to kind of insulate yourself from that freeze happening, because that is a possibility in a market crash. The next step to it then, if the Heloc was to close and then essentially become a loan, then you would just want to treat it as such and then start chunking pieces of that loan onto the secondary line of credit that, again, you're going to want to get in place as soon as possible. If you were able to qualify for the home equity line of credit, you're going to want to get yourself, and chances are you already have other lines of credit or credit cards in your wallet anyway if you have a Heloc. But if all you have is a Heloc, it would make sense to get your hands on another unsecured line of credit that you can have as a backup just in case the market does tank, you lose the value in your property, they close your Heloc, and all of a sudden that becomes more like a loan, okay? And then from there, all you would do is treat that new loan, right, quasi loan, treat it like a car loan or treat it like a student loan, and you would start chunking that over onto a different line of credit. So that's really how you would deal with that. I mean, you just want to make sure you have an additional line of credit in place that you can use just in case your Heloc gets frozen in the chance that there's a market crash and they decide to close your Heloc. Again, it's worth taking that precaution to have that backup line in place anyway. And also as well, with the backup line, let's say you did your chunk over to your Heloc and you knock that down. From there, you may receive a nice offer from the secondary line of credit, which again gives you the ability to use that and even pay less interest if you're getting a special rate or a promotion offer or something like that. So definitely get that second line of credit in place so that way you can have the mental that you're going to be all good if they do decide to close your Heloc. And then from there, you have a backup plan, okay? Part of putting together any sound plan, to attack your debt, to move towards financial freedom, every plan A deserves a plan B. Every plan B deserves a plan C. So having a backup and even a backup to the backup definitely makes sense, if you want to make sure that you're able to utilize these strategies to their fullest and best capabilities.